Well, let's rock and roll. I mean, Carol, we appreciate this opportunity. For all of you that have joined us here on today's call, we're definitely delighted to be here to the "Don't Be Scared of Long-Term Care," presentation. I do apologize for the PowerPoint presentation not being pulled up here and some technical difficulties, but you'll get this all in a follow-up as well. Thank you. We're here to talk briefly about reasons why we're here on this call. On behalf of Coventry. Secondly, who are the clients that we're serving, and really put a spin on how we can help, that long-term care, healthcare planning conversation. And then finally, how can we work together here moving forward into the future? NAIFA has been a big fan of Coventry, and Coventry has been a long-time supporter of NAIFA. Carol, we've loved working with you personally here over the last 4 years, you and your entire team, particularly as we complement the discussion with the Limited Extended Care Planning Center and how we are truly adding value to this discussion that we're going to have today, that truly not too many individuals are aware of this massive opportunity that Coventry is experiencing here, in the life settlement industry. But since it's Halloween, I thought we'd have a little bit of fun here, not just play trick or treat, but also deliver some tricks and treats for you over the next 10, 15 minutes. What I thought I would open up with is the history of Halloween. If you quickly look at some of the historical references during Halloween, it actually goes back to the 4th, 12th century is when it really started taking flight. In the 12th century, it was definitely more of a pagan, Scottish, cultural, type of celebration, of paganism before the eve of the Christian Soul and Spirits Day. And it was actually called All Hallows Eve. What I wanted to share with you from a historical perspective is that not many folks know life settlements were developed back in the early 1911s when you start looking at a Supreme Court ruling, of Grigsby versus Russell that actually identified life insurance as an asset. So from a historical perspective, the life settlement solution has been around, for over 100 years. And a lot of folks just quite frankly, aren't aware of this opportunity that I'm going to speak briefly about today. When you start looking at insurance policies, here's a little bit of the treats I want to open up with today before we get into my commentary. You look at life insurance business and you look at death claims in life insurance, you'd be fascinated when you look at over 95% of term policies never produce a death claim. Secondly, more than 85% of permanent insurance policies never produce a death claim. That creates an unbelievable opportunity to start having this discussion with your clients that are seniors, retirees, and business owners, particularly as they're planning for that next life stage, in their lives. And a lot of that is the long-term care, healthcare planning conversation. This equates to hundreds of billions of dollars a year that are left on the table where you can add exponential value with their existing insurance policies and creating a life settlement opportunity. I'm Patrick Cahill with Coventry. I head up our strategic accounts. It's been a pleasure working with NAIFA, over the last few years. Secondly, we've been firm supporters. For those of you that have attended the most recent NAIFA Apex East meeting, we'll also be at the Congressional Leadership meeting coming up in a couple weeks. We look forward to meeting you in person. Coventry created the life settlement arena over 30 years ago from a secondary market perspective. We've created value exponentially to policy owners in north of $5.5 billion and purchased in excess of $55 billion in insurance with existing policy owners. These policies, the value that we generated, many instances, that's going to complement the healthcare long-term care planning conversation. Coventry is the market leader in this business. We are in the business of insurance policy reviews, and we feel that insurance is an asset. Sometimes it's one of your largest assets, when you start looking at retirement planning. And if your needs have changed and you no longer need that existing insurance policy, a life settlement might be extremely, extremely advantageous and add a lot of value, to that next stage, in your life. Some of the reasons why we're experiencing such positive tailwinds, particularly in a harrowing state of affairs with Halloween as it relates to long-term care healthcare planning, is due to the increased longevity, of retirees. If you're born today, it's a flip of a coin. The child will live to age 100, right? That's wonderful, right? With wonderful science breakthroughs that are happening, people are living exponentially longer. That's also putting a lot of pressure, on their resources and their assets, particularly in a declining defined benefit arena. Also pending a concerns with Social Security trust fund maybe running into default here in the next 10 to 20 years. So longevity is number one. Number two, inflation has put profound pressure not only on existing insurance policies over the last 10 to 12 years, but we are running into experiences with insurance policies where folks are being asked to pay 10, 20, 30, 50% increases in the cost of insurance to maintain that policy. Thirdly, you start looking at the volatility in the marketplace today. Due to increased volatility in the markets, particularly after 2008, a lot of folks are pressured with their existing investable assets and they're looking for liquidity. Life settlements create a wonderful liquidity opportunity where you can potentially reposition assets to something that's more important and more prevalent to them in their lifestyle. And then finally, when you start looking at the expenses, that is involved in retirement planning, particularly for retirement that lasts 20, 30 years, the expenses that might be relative to the changing estate tax exemptions where individuals, businesses have purchased insurance policies they may no longer want or need it. But most importantly, and here's the reasons why we're here on this panel today, that is healthcare, right? We've all heard the studies. Those of you who are on this call here today, they've probably alluded to it where, 8 out of 10 individuals will experience some level of long-term care healthcare expenditure. I was just reading a new map of life Stanford Center on Longevity, and there's some quick bullet points that I want to share with you just to tailor my commentary here before I get into a few case studies. The American healthcare system is the most expensive worldwide. Healthcare consumes 17% of the national GDP, costing over $11,000 per person annually. Growing healthcare costs are only accentuated on the backdrop of a shrinking U.S. economy, particularly due to COVID. And during COVID, U.S. healthcare premiums grow 4 times faster than the median earner's wage, with average premiums now costing $6,000 compared to a median salary of $33,700. And that's put pressure on business owners. A lot of folks are unemployed right now. A lot of folks are reliant on healthcare services through employment, but a lot of people are also looking for alternative types of solutions and a holistic financial planning conversation with advisors and agents that are out there, particularly nearing that next chapter in their life. So a life settlement, very simple. Who do we work with here at Coventry? We do a lot of advertising. Many of you may have seen our advertisements over the years. We're here to educate, on the benefits of insurance policy reviews and the value that policy appraisals and evaluations can add to your financial planning conversations. Our traditional client today, you're looking at a 65 and older marketplace. The marketplace has become a lot younger and healthier than it's ever been since inception. So for those of you on the phone that have conversations with your retirees, this is something to bring up in conversation with them. If you own an insurance policy, have your needs changed? When's the last time you've had that evaluated? If your needs have changed with this existing insurance policy, would you like to go to a secondary market and see if an appraisal would be appropriate for you? Because you can find exponential value in these policies. Our policies now, the market has broadened. It's $100,000 and up. So we're looking at policies that are $100,000 and more in face value. And particularly if you're having conversations with your clients, that have a change in health, these are a couple areas where a life settlement and a policy appraisal, might be appropriate. Who are we working with? And this is where I kind of want to share with you, here's an example. 3 quick case studies I want to share with you to think about it. Start percolating your ideas. Coventry does CE every month. We ask you to join us for future, CE, talking about trends and opportunities of life settlement industry. But here's number one. And this is a conversation that we have daily, with the thousands of folks that are calling us weekly, to evaluate their policies. Here's a term conversion. A lot of folks are unaware that in a term policy, because it has no value, there could be some value there inside of this policy. Here's an example. You have a 7-year-old client in relatively good health. This is a policy we may not have purchased previously, but in this instance, due to the changing landscape of life settlements and the value that now is available to a lot of the institutional capital that's involved in our space, Here's an example where an individual was 7 years old. They no longer wanted, needed the policy because the term was about to expire. And here's an example where we purchased it for about $150,000 to that individual. In this example here, they reallocated that life settlement into something that was more appropriate for them. And this example was a retirement income solution, but it also can complement that long-term care, healthcare planning conversation, that you're having with your clients. First idea, convertible term policies. If you have clients that are 65, to 75 years old, this is a marketplace where you can add exponential value to your conversations with your client. And now you're looking at Coventry, about 25% of our overall purchases here at Coventry are term policies. So idea number one, to complement the long-term care conversation, are term policies. Number two, what I wanted to share with you, and this is our, more bread and butter, type of solution, more of a permanent policy, here at Coventry. About 50% of our purchases here at Coventry are universal life policies. A lot of the clients, that we are having conversations with love the insurance conversation. They just hate, paying the premiums, to their to the carrier, but they do want to keep that insurance policy in force. But here's an example where, it was a $1.8 million universal life policy on a 72-year-old individual. We helped them maintain $300,000, of insurance coverage with no future premium obligations. So going back to my point, many of us on the lines here, many of our clients love the thought of insurance. However, we don't want to pay future premiums to keep that policy in force. We were able, through our consultative process here at Coventry, to help this individual maintain insurance coverage. But more importantly, and I think, Carol, this really complements, for the ongoing healthcare conversations, you were allowed to redeploy the premiums into that insurance policy and diversify that into potentially, a flex pay, life insurance, long-term care, healthcare planning, type of solution. And obviously in this instance, there's a commission shared too as well with the advisor and the agent. So something we're seeing here more, at Coventry is the conversation with retirees and seniors about maintaining some level of insurance coverage, but redeploying those premiums into another, type of solution that, is more appropriate for them as they're aging into retirement. So the second idea, permanent policies, but also a more of a retained death benefit type of solution. And then finally, Zach, I appreciate you stepping in here with the slides. This is something certainly for more advanced planning conversations. If you look at the healthcare planning conversation, Carol, I know you talked about this many a times with higher net worth individuals about self-insurance, but when you start looking at, estate planning and some of the changes that have happened over the years with the estate tax exemptions, we are seeing a lot of higher face value policies where, quite frankly, they are no longer wanted or needed due to the changing landscape with estate tax exemptions. Here is an example where, we paid out, $893,000 for a $3.8 million policy as a universal life policy. But in this instance here is a redeployment, of assets, for legacy planning purposes for, the grandchildren and the family. But again, here's another example where you might have higher net worth individuals that think that they could self-insure themselves, in retirement with long-term care, but you're actually helping them redeploy those assets, into, a long-term care, healthcare, type of planning solution, which we think is very, very powerful. But, with my opening remarks, sometimes it's overlooked, and here at Coventry, since we've created the marketplace for life settlements, we've seen this day in and day out, with our educational efforts, where folks just quite frankly are unaware of this opportunity. And on an annual basis, it's leading to hundreds and hundreds and hundreds of billions of dollars, for the senior marketplace that can really, benefit, from this type of solution. So on behalf of Coventry, we commit to education. Education is in our lifeblood. We believe in life insurance. We believe life insurance is an asset, and if your needs have changed, then a policy appraisal with a life settlement, could be very, very relevant. For those of you on the phone here with our education, if you are working with, trust officers, estate planning attorneys, banks and credit unions type of examples, employee benefits specialists and HR consultants, these are all referral sources, These are ways to deepen, your existing relationships, with your centers of influences, and to add value, particularly as seniors and retirees and business owners are, enjoying that next, chapter of their life. So just in closing, Carol, we've always loved, working with the team. We appreciate this few minutes here to spend some time here, with you on the Don't Be Scared of Long-Term Care conversation. We would love to add value to all of you on the call here today. If we can ever be a resource here directly, you can access us via the NAIFA website. There's a Coventry portal there, where we can actually schedule meetings or actually appraise a policy if anything I shared here today resonated. We're fully about transparency and education. Again, and my name is Patrick Cahill. I will be in the PowerPoint that we get out to everyone. Feel free to contact me directly here, at Coventry if we can add value to your existing conversations, with your seniors, retirees, and business owners. So there, I'll pause. Thank you, Carol.